everyone. In this video, we are going to discuss about GST returns. There have been certain amendments which have taken place in this, and that's why it's very important for your exams. Now, first let's understand the basic structure of return, and thereafter we will discuss one important scheme which has been introduced in GST return. Say suppose I were to take an example. I have a friend whose name is Mr. A. Now he has done various sale transactions. Now all these sale transactions he has to report it in GSTR1. So all your outward supplies will be reported in GSTR1. The due date for GSTR1 is 10th, 11th of the next month. See, it's not a case that you can file on 10th or you can file on 11th. The due date as per section 37 is 10th, but normally it is extended every time to 11th. And that's why technically if you ask anyone what's the due date of GSTR1 who has filed it, he would say GSTR1 due date is 11th. But under the section even today it is 10th. Institute has provided both of these details in MAT, and that's why we will also be using the same thing. The due date as per section 37, 10, it has been extended to 11. Then, all his purchases, he can view it in a form GSTR 2A/2B. I will come to GSTR 2B after some time, but this is a viewing form. This is not a return which you are required to file. Just because it says GST return, it does not mean you are going to file this. This is available if your suppliers have provided the invoice correctly, then it will be reflected in your GSTR 2A 2B. So, I have to report my sales in GSTR1. Once I report my sales in GSTR1, my recipients will be able to see it in their GSTR 2A 2B. And when I purchase from someone, if my supplier has uploaded and furnished GSTR1 correctly, then I can see it in my GSTR 2A 2B. So can I say a person viewing GSTR 2A 2B would compare it with his purchases? Okay. Thereafter, you have a return GSTR 3B. This is the return under section 39. This is to be filed by 20th of the next month. And what is furnished in this? It is a simple return which contains details of outward tax, input tax credit, RCM payment, and any tax payable under any of those output minus ITC. So, entire tax payment happens with the return called as GSTR 3B. The due date for GSTR 3B and the due date for payment of tax is same. Fair enough. Thereafter, a person is required to file an annual return GSTR 9. Now this annual return is filed and the due date is 31st December after the financial year. And then you have GSTR 10. A person whose registration is cancelled, he files a final return. Now for this final return, the due date is 3 months from date of cancellation or 3 months from date of order of cancellation. See, order is issued by officer. So, effective date of cancellation or order of cancellation, whichever is later. Be very careful with this. Here, the law has provided much more time. So, 3 months from the date of cancellation or 3 months from the date of order of cancellation. See, order of cancellation is passed by proper officer. He may grant you cancellation from a prior date or it might apply from a future date. The day from where cancellation is effective, that would be compared with the order date. Whichever is later, from there you will get 3 months time to file your final return. And sir, what details do we give in this? Details of stock reversal of ITC, because whenever a registered person is becoming an unregistered person, he is required to discharge tax, reverse ITC, and balance ITC if any in his books of accounts will lapse. That's what we discussed while discussing cancellation of registration. Okay. What does a composition dealer do? Now, composition dealer, a person under composition scheme, he pays tax quarterly basis. So, while he is paying tax quarterly basis, he files a return in form CMP08. This is basically a statement where he is making a payment on quarterly basis, and the due date for this is 18th of the next month after each quarter. So once the quarter ends, 18. If I were to take an example, April to June, the due date would be 18th July, and for July to September, the due date would be 18th October. That's the payment due date because he pays quarterly in a form called as CMP08. Then he has to file a return on an annual basis, that is GSTR4. And this return on annual basis, the due date is 30th April after financial year. So once the financial year ends, by 30th April, you are required to file the annual return as a composition dealer. Now, any other return applicable for your exams? One last return is GSTR 5, which is filed by a non-resident taxable person. Interesting due date. The due date for GSTR 5 is 20th of next month or 7th day from the last day of validity of registration, whichever is earlier. Very careful. See, when we talk about an NRTP, he might have taken registration for a limited period. Now, when we say he might have taken registration for a limited period, that's why you can see that the moment his last day validity registration ends, within next 7 days, he is required to file a return called as GSTR 5. So that's why it is 20th of the next month or 7th day from the validity of registration, whichever is earlier. Say suppose I were to take an example. If an NRTP has taken registration for 15th Jan to 18th Feb, 15th Jan to 18th Feb, that means he would be filing two GSTR 5s, one for the month of Jan, one for the month of Feb. For Jan month, the due date will be 20th Feb. For Feb month, will we wait till 20th March? No. His last day of validity of registration was 18th Feb. So from 18th Feb, we will count 7 days and the return due date would be 25th Feb. That's how NRTP due date works. You don't have ISD, TDS, TCS, OIDAR, all this you learn at CF final. So these are the returns which is important for you and applicable. GSTR 1, you can view your purchases in 2A, 2B, 3B, thereafter 4, 5, there is an annual return to be filed by 31st December and a final return if a person registration is cancelled. Okay. Now, let's get into a new scheme which has been introduced in the law. There is a new scheme which is introduced in the law with effect from 1st Jan 2021. Now what is this new scheme? So with effect from 1st Jan 2021, a person can file quarterly return and has to make monthly payment if he wishes to. Quarterly return, monthly payment, also called as QRMP. Name has the meaning. Quarterly return, monthly payment. Let's understand this. First, if a person has an aggregate turnover of more than 5 crores in preceding financial year. So, preceding financial year, the aggregate turnover was more than 5 crores. In that case, this QRMP is not applicable for him. He will file GSTR1 monthly, that is 10th/11th. He will file GSTR3B. Again, this will be monthly, that is 20th. And he will also pay the taxes on monthly basis, and obviously tax payment due date is same as GSTR3B, which is 20th of the next month. So GSTR1 monthly, GSTR3B monthly, tax payment monthly, if your aggregate turnover is more than 5 crores in preceding financial year. Okay, then let's understand to whom does this option apply. If a person has a aggregate turnover of up to rupees 5 crore in preceding financial year, then we can opt for quarterly return monthly payment scheme. So a person who has aggregate turnover of up to 5 crore in preceding financial year technically has two options. Option 1 is he can go for monthly. That means all the returns are monthly. GSTR1 is monthly, GSTR3B is monthly, payment of tax is also monthly. So option 1 I am just writing monthly. Then the second option which is available is QRMP. Name has the meaning, people. Quarterly return, monthly payment scheme. Quarterly return, monthly payment scheme. That means you will make the payment of GST on a monthly basis, but you can file returns on a quarterly basis. Let's understand how it will work. First, he will be required to file GSTR1, and GSTR1 is required to be filed on a quarterly basis. And what's the due date? Due date kept here is 13th of the next month after each quarter. So once the quarter expires, 13th, you are required to file GSTR1. GSTR3B will also go on a quarterly basis. Due date is staggered. Staggered meaning 22nd/24th of the next month after each quarter. Now, for some states it is kept as 22nd, for some states it is kept as 24th. Sir, why so many due dates? Like here it is GSTR1 would be 11th, while here quarterly it is 13th. To avoid rush on the portal at the same time. GSTR3B here is 20th. Here it is 22nd, 24th. Some states 22nd, some states 24th. To avoid rush on the portal on a particular day. That's the reason behind keeping it different for different states. Yes? Okay. Then, the law is very clear with one thing. See, return you can file quarterly, but tax payment has to be done on a monthly basis. So, payment of tax will be done on a monthly basis. Now, obviously, we will focus on first 2 months. Why first 2 months? Because third month, anyways, you are going to file GSTR3B Along with that, you will pay the taxes. The law says that for first 2 months, you have to deposit money in e-cash ledger. So money has to be deposited in e-cash ledger. You don't utilize it, it's just that you deposit that money in e-cash ledger. Now, let's understand how much of money has to be deposited in e-cash ledger for month 1 and month 2. See, government has here also given you 2 options. Option A. Now, before explaining option A, I will just take a very small example. April output tax 10 rupees, ITC 6 rupees, tax payable is 4 rupees. May output tax 10, ITC 6, tax payable 4 rupees. Now, if this was the case, option A says for first month and second month, you pay the self-assessed tax. Now, what is the meaning of self-assessed tax? Self-assessed tax for April would be 4 rupees, for May it would be 4 rupees. So, pay the self-assessed tax. Sir, if I were to anyways calculate everything and then pay these taxes, I will better prefer monthly scheme itself. Just wait. Government has given option B as well. If you don't want to compute it on a monthly basis, if you don't want to compute your liability on a monthly basis, for you, there is option B. That is, you pay a fixed sum. Now, when I say you pay a fixed sum, what is that fixed sum? That fixed sum is, for month 1, it would be 35% of tax paid through e-cash ledger in previous quarter. See, if we are talking about April, May, June, what is previous quarter? Sir, April, May, June, previous quarter would be Jan to March. So, Jan to March, if I have paid 10 rupees through e-cash ledger, tell me how much is 35% of this? If I have paid 10 rupees through e-cash ledger in Jan to March, then 3.5% would be 3 rupees 50 paise. That means I can pay 3 rupees 50 paise being 35% of the tax paid in the previous quarter. Clear? Okay. Month 2, I will be paying the same thing. So month 1, I pay 35% of the tax paid in previous quarter. Month 2 as well, I pay 35%. Sir, month 3, I will pay balance 30%. No, people, by month 3, you will do the actual computation and whatever is the remaining tax payable, that has to be discharged. So this is only for month 1 and month 2. Month 3, so anyways, you have to do the final computation and then discharge the liabilities. Clear with this? Okay. Now, 2. 1. Self-assessed. Second, fixed payment method. Fixed sum. First month, you pay 35% of the tax in previous quarter. Second, you pay 35% of the tax paid in previous quarter. Clear? Okay. Now, be very careful about one particular point. If I don't pay these amounts, will interest be applicable? The answer is yes. If I don't pay any of these amounts, then interest under section 50. And interest rate, you are aware, 18% per annum from the due date till the date of payment. But sir, what will be the due date for month 1, month 2? Month 3, so we understand. Month 3, the due date will be 22nd or 24th. But what about month 1, month 2? Government has said that the due date for month 1 and month 2 will be 25th of the next month. So for April, the due date will be 25th May, and for May, the due date will be 25th June, and for June, for April, May, June, then the due date comes to 22nd, 24th. For the third month of the quarter, it will always be linked to the due date of GSTR 3B. Okay. Now, think about one case. Say suppose I go under self-assessed and I don't pay 4 rupees. Will interest apply? Sir, yes, interest will apply. Okay. if I go under self-assessed and pay 2 rupees, whether interest will apply? Yes, interest will be applicable. Third case, if I go under fixed sum and pay 3 rupees 50 paise instead of 4 rupees, will interest be applicable? The answer is no. So remember this always, that if you are paying 35% of previous quarter in month 1 and month 2, then never will interest apply for any shortfall. So if there is an excess payment we will talk about it, but if there is a shortfall, interest will never be applicable in case you have paid fixed sum. But say suppose first month you pay 35%, second month you don't pay anything, though you are required to pay this 3.5. In such cases, whether interest will be applicable? The answer is yes, interest will be applicable. So remember one thing, interest is for both the cases. In the second case, that is fixed sum method, interest will apply only when you don't discharge 35% which is required to be discharged. If you don't discharge 35%, then interest will apply. If you have discharged 35%, then interest will not be applicable. Clear with this? Be very careful about this payment. Payment has to be done on monthly basis, and what is the mode of payment? You are required to deposit that money in e-cash. Sir, if my e-cash already has that much money, then no need to deposit. If you have already that much money, then please don't deposit it. Okay. Now, tell me one thing. I have some questions for you. One, do you think that aggregate turnover up to 5 crore in preceding financial year, I can opt for QRMP? Will this option be available for any turnover in current financial year? See, last year my turnover was up to 5 crore. So current year I took QRMP. Can I take QRMP for 50 crores? Remember one thing, QRMP for current financial year will be limited to 5 crore. The moment I touch 5 crore, from the next quarter, I have to shift to monthly returns, monthly payment. Clear with this? This is similar to what you had read in composition scheme, that if the aggregate turnover crosses 1.5 crore in current year, then you are required to shift to regular scheme. Yes? Okay. Now, you are required to think about these 4 cases which I am telling you. First, while you are seeing this much, think about these cases. 1. Will a person be allowed to move from monthly to quarterly, quarterly to monthly? Think about it. Second, can this monthly or quarterly be chosen GST wise? For instance, Bangalore branch chooses monthly scheme. Mumbai branch chooses quarterly scheme. Would that be permissible? Third, if I file my returns on quarterly basis, will my recipients shout at me? Will they be worried? Will they be angry? Will they have a concern? Last question, what if I have deposited excess money? Can I use it for any other purpose? These are the 4 questions which you have to think. First question, can I shift from monthly to quarterly, quarterly to monthly? Second question, can I choose GST wise? Third, if I file return quarterly, will my recipients face an issue? Fourth, if there is an excess deposit made, what would happen to that excess deposit? Okay. Now let's start answering all these 4 questions. See it very carefully. Government has clearly provided that you can shift from option 1 to option 2 and vice versa, no problem. Shift from monthly to quarterly, quarterly to monthly is permitted. But people, you can't shift in between the quarters. So for one quarter, if you are following monthly scheme, you have to follow monthly scheme for that quarter. For another quarter, if you are filing quarterly scheme, you have to follow that quarterly scheme. Then when can I shift? See this carefully. If the quarter is April to June 2021 and I want to select or change my option for April to June 2021, then I have to select or change between these two dates. 1st Feb 2021 and 30th April 2021. So, if for April to June I want to shift, then I have to shift between 1st Feb 2021 till 30th April. Now, how is this written in the law? The law says first day of second month of previous quarter, first day of second month of previous quarter, and last day of current quarter first month. See this carefully. So, you can shift between first day of second month of previous quarter. First day of second month of previous quarter is first day, till last day of first month of relevant quarter. Last day of first month of current quarter. Between these 2 days, you can shift. If you see technically, if you want to shift for April to June, go to the previous quarter, ignore first month. Again, go to the previous quarter, ignore first month. That is the time. April to June, previous quarter is Jan to March, leave Jan, 1st Feb to 30th April. That is the time when you can shift. But you have to remember this language for writing answers in examination. Okay. Then, can I choose GST wise? The answer is yes. The law has permitted that one can go for monthly return scheme, second branch can go for quarterly return scheme. No bar at all. Now, this is different from composition. People, can some branches take composition and some branches regular scheme? The answer is no. But here when it comes to GST return, see, it would not make much difference because payment of tax will anyways be monthly. So government would not face an issue in this. And remember one thing, say suppose last month you have filed monthly return, then the tax which you have to deposit in month 1 and month 2 will be 100% of the tax paid in previous month. Let me just show you with an example. See, previous quarter I was filing quarterly return. In that case, month 1 I have to deposit 35% of the tax which I deposited in previous quarter. Month 2, 35%. Correct? Yes. But if my previous return was monthly, then how will I find out previous quarter tax paid? That's why if my previous return was monthly, then 100% of tax paid in previous month. And obviously whenever we write tax paid through e-cash ledger. And here also it will be 100% of tax paid in previous month. See, it would not make much difference. Why? Because 35% of previous quarter is approximately 1/3, not exactly 1/3, but approximately 1/3. And 100% of previous month is also making you pay for a particular month. Clear with this? Okay. Then, note 3. Will my recipients be worried if I file quarterly return? See, government has provided a facility where you can furnish B2B invoices on a monthly basis by using a facility called as IFF. Now what is this IFF? Invoice Furnishing Facility. And the due date for this is 13th of the next month. So obviously for month 1 and month 2, can you go ahead and file IFF? The answer is yes, you can go ahead and file IFF for month 1 and month 2. Clear with this? Okay. But there is one restriction. For a particular month, you cannot furnish more than 50 lakh worth invoice in IFF. So IFF has a limit only to the extent of rupees 50 lakh B2B invoices. Sir, what about B2C invoices? You tell me, will B2C invoices be relevant for the purpose of taking ITC for the other person? The answer is no. So B2C invoices, obviously you can furnish it directly in GSTR1, not in invoice furnishing facility. Oh. Then, what if there is a excess payment line? If there is a excess payment line in my eCash ledger, can I use it for other purposes? The answer is yes, I can use it for other purposes after filing return for the quarter. So, in April to June, if I have paid excess at 35%, so first I have to file that April to June quarter return and then balance eCash ledger any amount remaining. I can use it for any other payment. Plus, a refund can also be seen. Okay. This entire thing was about QRMP. Have a look at QRMP again. See this. First, it was introduced with effect from 1st Jan 2021. More than 5 crore turnover in preceding financial year. No scheme. Monthly GSTR1, monthly GSTR3B, monthly tax payment. Turnover up to 5 crore in preceding financial year. Option 1, go for monthly. Option 2, go for quarterly return, monthly payment. GSTR1, you will file it quarterly by 13th of the next month after each quarter. GSTR3B, you will file by 22nd or 24th of the next month after each quarter. Payment of tax is to be done monthly. This is the key point. And it is for first 2 months that you have to deposit money in eCash ledger. Option A, you pay the self-assessed tax. Option B, you pay a fixed sum of previous quarter if your last return was quarterly. So 35% of tax paid in previous quarter. Don't forget, tax paid through eCash ledger. And what's the due date for month 1, month 2 payment? 25th. If you don't pay by 25th or if you don't pay 35%, in such cases, interest will be applicable. And interest would be at 18% per annum. Okay. Then coming to some key points. Can I shift? Yes, obviously. I can shift between first day of the second month of previous quarter till last day of the first month of current quarter. Language. Then GSTIN wise, I can choose GSTIN wise. B2B invoices, I can furnish it in IFF up to 50 lakh. Last, if there is an excess payment, yes, after filing GST return for that quarter, I can use it for any other purpose. Clear? Okay. So this was about QRMP. Now with QRMP, it is important to discuss one important rule, that is Rule 36.4. See this carefully. This is a for availing ITC. What does it say? It says that in respect of invoices not furnished by the supplier. So my supplier has not furnished GSTR1 or IFF. If he has not furnished these invoices, then ITC on that invoice will be restricted to 5% of the invoices furnished by the supplier. I'll give you an example. Say suppose I have purchased from 4 persons and the total ITC as per my books is 100 rupees. Now out of this, 3 persons have furnished GSTR1/IFF and this is showing 70 rupees. This is as per GSTR2A. Then how much of ITC can I claim? Because that one person has not furnished GSTR1, so it is not coming in my GSTR2A. So I'll keep calling him saying that please furnish it. Till that time, how much can I claim? The law says I can claim 70 rupees plus 5% of 70 rupees. That is totally 73.5. And once the other person uploads, I can claim the differential amount in the month when the other person uploads. Now, careful about one point. Whenever we talk about this, be very careful with the language. ITC in respect of invoices not furnished by the supplier. Invoices not furnished by the supplier is restricted to 5% of the ITC in respect of invoices furnished by the supplier. So 5% is computed on whatever is furnished and that much is what you can claim. Clear with this? Yes? Okay. Now coming to the key points in this. First, will you consider RCM invoices in this? The answer is no. Will you consider block credit or ineligible credit in this? The answer is no. Never consider RCM, block credit or ineligible credit in this. Third, what date is relevant to check GSTR 2A? What date should I check this? Based on what should I claim ITC? The law had first not provided anything. So CBIC clarified that the due date for GSTR1 is to be used. And that time the due date for GSTR1 was 11. So that means 11th night sit and download GSTR2A. Is it practically possible? Because if I download on 12th morning, some would have uploaded between 11th midnight and 12th morning. Government had said due date for GSTR1, that day you have to download GSTR2A. It was causing a lot of difficulty because 2A kept changing. The moment my supplier uploaded, 2A changed. So it was causing a lot of difficulty. Then, now what is applicable for your exams is they introduced a new form called as GSTR2B. Now this GSTR2B gets generated on 14th of each month. Obviously the due date can be extended, but on 14th each month you will receive GSTR2B. Sir, what is GSTR2B? Whoever has furnished returns between last month 14th till this month 13th, all those details will be given to you in GSTR2B. So GSTR2B can be used for the purpose of taking ITC. So when I say this 70, at present, which form is used? At present, GSTR2B is used, and based on GSTR2B, we take ITC in our GSTR3B and file the return. So 14th, you will receive this GSTR2B. Based on that, do the comparison of books and GSTR2B and claim ITC. How much of ITC to be claimed? 73.5. Sir, why is it 14th? Because we just learned that QRMP scheme, IFF and GSTR1 due date is 13th. So by 13th, everyone will file their returns. Who are filing it on timely basis, everyone will file their returns, and based on that, on 14th, you will get the details, do a comparison and take ITC. Sir, if someone has furnished, my supplier has furnished on 14th, then wait till next month, because that will be reflected in GSTR2B of next month. Hey, did you understand this? Yes. So there is a lot of matching to be done for claiming of input tax credit. This is about Rule 36(4), which we did not discuss in ITC video because it makes sense with returns. Okay. Then government has also added Rule 86A. Now what is this Rule 86A, sir? 86A, where the officer has the power to block e-credit ledger. Yes, he will not allow to use even a single rupee from e-credit ledger. Obviously, this is done in case where he has reason to believe that ITC is taken fraudulently or the person is ineligible for ITC because he does not have the document, or the supplier who has uploaded or furnished this detail is non-existent, meaning he is missing, or the recipient himself is missing, or the ITC was taken without actual receipt of goods or services. In such cases, the officer has the power to block usage of e-credit ledger. But this will remain valid only for 1 year. Yes. After 1 year, this will cease to have effect. That means the officers are given 1 year's time to complete the inquiry. It's not a case that thereafter they will leave this person. No. They'll complete the entire inquiry and thereafter the process gets complete. So 1 year is the time for which officer can block the credit ledger. Okay. One new point added for November 21 is Rule 86B. Now what is this Rule 86B? See, most of the tax evaders who are claiming fake ITC, will not pay even a single rupee from e-cash ledger. Government got to know this. Government said, I will make it mandatory to pay 1% through e-cash ledger. See the restriction carefully. If your output tax is rupees 100, then how much can you use from your e-credit ledger? The maximum which you can use from your e-credit ledger is 99% of output tax. And 99% of output tax will be how much? 99% of output tax will be 99 rupees. So to the extent of 99 rupees, you can pay through e-credit ledger. Balance 1 rupee has to be paid through e-cash ledger. So this is the restriction which is placed in the law. Now, is this very harsh? The answer is yes, it is very harsh. But government has provided lot of reliefs in this. Because a genuine person should not be required to pay 1% through e-cash ledger. So, first of all, this 86B will apply only when taxable supply in a particular month exceed 50 lakh rupees. Only when the taxable supply exceed 50 lakh, only in those months will this particular provision be applicable. Not exempt supplies, not zero rated supplies. Taxable supplies exceed 50 lakh in a particular month. Only for that month it will apply. So, if for 1 month I have 30 lakh taxable supplies, this restriction will not apply. So, first condition, it will apply only when taxable supply exceed 50 lakh. Okay. Second, there are various exceptions. Now, what are the exceptions? See, if you see the exceptions, most of the genuine taxpayers would be out of this 86B. First one, a person who has paid more than 1 lakh rupees of income tax in last 2 preceding financial years. So, if you have paid more than 1 lakh rupees of income tax in last 2 preceding financial years, then in that case, this restriction of 86B will not be applicable. Tell me, a person with more than 50 lakh of taxable turnover in a month, will he normally pay 1 lakh as income tax? The answer is yes. Either he has paid, or two partners or managing director or whole-time director, if they have paid this amount more than 1 lakh rupees as income tax in two preceding financial year, then this restriction will not apply. Second is a case where a person has claimed more than 1 lakh as refund. See, refund you don't study at this level, but this refund is basically of unutilized ITC, which is given in exports and inverted tax structure, is not required. Then third one is a person who has cumulatively paid 1% up to the said month. See, this very important, can be asked as part of a case study. See, April month my output tax was 100 lakh. ITC was 96 lakh. That means 4 lakh I have paid through e-cash ledger. May month also output was 100, ITC 96 lakh, 4 lakh I paid through e-cash. June month I had more of purchases. Just because I had more of purchases in 1 month, should I be responsible to pay 1% through e-cash ledger? Now see this carefully. If I put the total of output tax, total of output tax comes to 300 lakhs, correct? 300 lakhs into 1% is how much? 3 lakh. Have I paid at least 3 lakh through e-cash ledger? The answer is yes. Cumulatively up to the said month of current financial year, if I have paid 1%, then in that case, this restriction will not be applicable. But say suppose the same data of June was there in April, being the first month of the current financial year, then I would be required to pay 1%. But trust me, even if you are not covered in this C point, at least you will get covered in A or B. So at least 1 lakh income tax would have been paid. A, clear? D is government department, local authority, public sector undertaking. Obviously people, government department, local authority and public sector undertaking, this provision will not be applicable. That is, Rule 86B is not applicable. So, in essence, Rule 86B, 1% can be paid through e-cash ledger. Correct? Now, 4 cases where this is not applicable. More than 1 lakh of income tax in two preceding financial year, or you have got more than 1 lakh of refund for previous financial year, or cumulatively you have paid 1% up to the said month, or government department, local authority, public sector undertaking. So, we have discussed Rule 36.4 and we have discussed Rule 86A and 86B. Now is the time where we conclude with certain returns. See, GSTR1 comes from section 37. Some important points. Are you also required to file nil return for GSTR1? The answer is yes. If there is no transaction, you are required to file nil return. What is the last date for rectification of an error in GSTR1? Date of filing September month return after the financial year, or date of filing annual return, whichever is earlier. 3B we have anyways discussed in detail. GSTR4 we have discussed quarterly payment and annual return is to be filed. GSTR5 we have discussed the due date. Then comes section 40. First return. See, first return is the first GST return which you are going to furnish. And first return would contain details from the date a person was liable to register till the date of grant of registration. Between these two dates, whatever transactions have happened, he has to report it in his first return. First return is not a separate return. It's the first return filed after grant of registration which will contain details of that month and any previous month from liable date till grant. Then 41, 42, 43 not there for you. Section 44 deals with annual return. Now, when we talk about annual return, we understand GSTR 9. We understand GSTR 9C. 9C is a reconciliation statement which has to be certified by a chartered accountant if a person's turnover exceeds 2 crore. But for FY 1920, the limit kept is 5 crore, where it has to be certified by a chartered accountant. Already an amendment has taken place that this 9C certification by chartered accountant or cost and management accountant will get deleted, but it will not apply for November 21 exams as it is not yet notified. Then 9A is a form which has to be filed by a composition dealer annual return, but even this is not active. So not even a single 9A has been filed till date, and it is as good as not there for practical reasons. So you can ignore that. So 9C, these are the two things which you should be comfortable with in annual return. Remember one thing, casual taxable person does not file annual return. See, he files GSTR 130, but he does not file a annual return. Then you have section 45, which deals with final return. We discussed GSTR 10, 3 months from the date of cancellation or 3 months from the date of order of cancellation, whichever is later. Then we have section 46, notice to defaulters. Obviously, officer has a power that a person who has not filed GST returns, a notice can be given to him that please file the return within next 15 days. Then you have section 47, late fee. Late fee for any return other than annual return would be 100 rupees per day or 5,000, whichever is lower. Remember, this is CGST Act, so same provision will apply in SGST Act. And if it is annual return, then 100 rupees per day or 0.25% of turnover in a state, whichever is lower. Again, this is for CGST Act, so same provision is there in SGST, so late fee will be doubled. And then section 48, GST practitioner. Now GST practitioner, basically he will be given a separate username and password, and based on that he can file GST returns for the client, he can help them making payment, he can help them replying to notices. That is the responsibilities which GST practitioner can take. Remember one thing, that the primary responsibility will always be on the client, not on GST practitioner. Next, who can become a GST practitioner? If he satisfies conditions given in A part and B part. A has 4 things: person of sound mind, Indian citizen, not insolvent, not convicted. B part has or, that means there are 3 limbs which have or in between. So one of these being satisfied, a person can become a GST practitioner. A part, all 4 are required to be satisfied: sound mind, Indian citizen, not insolvent, not convicted. B part, either he is a retired commercial tax officer with 2 years or more of experience, or sales tax practitioner or tax return preparer with 5 years or more of experience, or graduate, postgraduate, passed CA, CS, ICWA final exam. Even such person can become a GST practitioner. An exam conducted by National Academy for Customs, Indirect Taxes and Narcotics, NACIN, conducts an exam that has to be cleared. Thereafter, a person can become a GST practitioner. Yes, so first was the return flow. Thereafter, we moved towards QRMP scheme, Rule 36(4), 86A, 86B, and finally, we concluded with these sections. All the best for your exam.